What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis. Let's jump right in. Multiple things to go over here with you guys. Senator Chuck Schumer from New York, a Democrat, reelected as the Senate Majority Leader. This comes as the Democrats just secured their 51st vote here. I think that was like within the last, was that yesterday or within the last 24 hours? As the Georgia just claimed their victory in the Warnock versus Herschel Walker runoff vote. Schumer reelected as a Senate Majority Leader here. Yeah, Senator Chuck Schumer was reelected here Thursday morning to serve another term as Senate Majority Leader for another 2 years. Who he was just reelected as a fifth Senate term. So remember, they serve 6-year terms. So 5 terms times 6 years is 30 years in the Senate. Wow, that's a long time. Senate Democrats also reelected the rest of Schumer's leadership team. Senator Dick Durbin as another Senate Democratic whip. Senator Debbie Stabenow, another term as Democratic policy chairman. Senator Amy Klobuchar, another term as Democratic Steering Committee, and Senator Bernie Sanders as chairman of the Democratic Outreach Committee. You can see here 5 vocal House Republicans explicitly have said or strongly indicated they will not support McCarthy for Speaker in a January 3rd floor vote. Representative Republicans Andy Biggs from Arizona, Matt Gaetz from Florida, Ralph Norman from South Carolina, Matt Rosendale from Montana, and Bob Good from Virginia. Several others, that's 5, including House Freedom Caucus Chairman Scott Perry from Pennsylvania and Representative Chip Roy from Texas, have criticized the current leadership positions, which Kevin McCarthy is the current leader for the Republican, albeit the minority leader, but still the leader for the party, on rule changes proposals that would empower individual members, but are not revealing how they plan to vote on January 3rd. McCarthy needs support from a majority of these voting for a speaker candidate on the floor on January 3rd, not including people vacant, out sick, or not there, absent or present vote, because if they vote present, it means they're present. It means they're just not voting one way or another, which would lower the threshold needed for the speakership vote. But the 5 most vocal opponents to McCarthy all said they will not vote present, further depriving McCarthy of breathing room. And the situation is starting to spur talks of contingency plans about what to do if McCarthy fails to secure enough votes, and the potential to work with moderate Democrats to secure an alternative Republican speaker. We've had preliminary talks with the Democrats. If we have multiple votes and there's not enough for a majority, we're not going to be held hostage by them. Representative Jim Jordan from Ohio, Republican, is concerned, quote, about Republicans striking a deal with Democrats to elect an alternative to McCarthy, saying, quote, let's hope that there's never any kind of bargain where you bring the Democrats into play, because they'll be trying to stop investigations that are our constitutional duty to conduct. A Republican representative who doesn't want to vote for Kevin McCarthy said, quote, if Kevin McCarthy couldn't lead the Republican minority, he doesn't have the ability to serve as Speaker of the House, which is the leader for both parties. Yeah, so let me know your thoughts here on this. It's been a long time since this happened. But apparently, if they don't get a majority vote for this, they will actually go to multiple vote offs and try to elect a leader. So it'll be interesting to see what happens here. It's been a long time since this happened. So we'll see. We'll see. I'll keep you up to date. Well, economists are saying that a US housing recession has already arrived. So, you know, this is a housing recession. And of course, there's multiple different types of recession. A lot of people saying an overall recession has already arrived as well. But here's the details on this. Let me know your thoughts. This has been a year of watershed moments in real estate, and not the good kind. The housing market index, a closely watched industry metric that gauges the outlook for home sales, declined to 33 in November on a 100-point scale. It's the lowest level in a decade. Whew. Save for the first dystopian month of the pandemic, anything under 50 spells trouble. A month earlier, interest rates on a standard 30-year mortgage passed 7%, capping the largest single year increase in at least 50 years. Wow. Quote, just to give you a sense of how far we've come, we started the year at around 3%, and now we're at 7%. Quote, it has just been a wild ride, more than doubling interest rates. Yikes. The difference between a 3% interest rate and a 7% interest rates amounts to $1,000 more in monthly mortgage payments on a mid-priced American home, according to the National Association of Realtors. $1,000 more a month for the exact same home for the average priced home in the US. Yeah, and Federal Reserve Chairman Jerome Powell has called this a great reset of the housing market. And the problem is we're going to see at least another interest rate hike here in December, only a few days away. It's set to happen here on December 14th is going to be the next interest rate announcement, probably. So keep an eye on that. So we're probably going to see the Fed announce yet another interest rate hike here. Remember that the last, I think it's 4 interest rate hikes in a row have been 75 basis points or 7.75%, just under a full percent hike each time, 75.75%, 4 times in a row, basically the last almost 4 months in a row. It's a little bit off from that, but you get the idea here. They've raised interest rates 75 basis points. Now we're thinking that it's going to be a little bit lower than that, at maybe 50 basis points or 0.5%. But nonetheless, they're going to raise interest rates here yet again. And every time they raise interest rates, it affects not just mortgages. It affects your credit card interest rates. It affects mortgages. It affects car loans. So whenever you go to buy a used car or new car, it makes those rates go up even higher. Every type of loan, a personal loan, a business loan, credit cards. Yeah, the credit cards have been probably the one of the worst ones here, because so many Americans have credit cards, and those are variable rates. The credit card company can raise your rate every month if they want to, or lower it every month if they want to. So if you haven't yet, it's probably a good idea to take a look at your actual rate when you get your statement in the mail and see. It'd be interesting to if you keep your statements, go back and look at like a statement from a year ago, from December of last year, and see what your interest rate was compared to this year. See if it's 3% lower, 4% lower, 5% lower. That really adds up. That really adds up, because that will probably equate to hundreds, or depending on your balance, thousands of dollars more in interest over the course of a single year. A single year. People don't realize how much that adds up. So you've seen the example there in the screen. For a home mortgage, that could be $1,000 a month just in interest. Just in interest. That's because it's a much larger balance. You're looking at like a $400,000 balance on a home, but that's $1,000 a month more just in interest, because the principal, the home, the mortgage is still the same. So that $1,000 a month more literally just goes right to interest. It basically goes out the window and gets burned. Yeah. Now, on the flip side, we're seeing home prices come down. There's it depends on the market. It really depends on the market, but home prices are coming down. We're no longer seeing those multiple bidding situations. Yeah, before the interest rate hikes, we were seeing literally if you were a seller, it was like a gold mine. The problem is that a lot of people that were selling a home were also going to buy another home. It's a rare situation that you would sell a home and not be going to buy something else, even if it's an apartment or some other type of home or something. You got to live somewhere for the most part. I mean, I guess maybe there's some rare circumstances you might be moving in with someone else or something, or something like that. But for the most part, most people, if they're selling a home, they're going to buy another home. I mean, maybe you're downsizing or upsizing or something along those lines. Um, but if you were a seller, it was a good time to sell, but then you also had to go buy something else most of the time. Most of the time. If you were a first time home buyer, you're like, man, these prices are absolutely crazy. But interest rates were low a year ago. Now, or even at the beginning of this year, March ish, 6 months ago, even. Now, home prices are coming down, but interest rates are sky high. Now, interest rates won't stay high forever, and at least the home prices are starting to come back down. So it's a little bit of a give and take there, and you'll be able to refinance in the future. You definitely want to. I mean, again, not financial advice because everybody's situation is different and stuff like that. But you'll want to do the math on when refinancing will be good. If you can, look for companies that like. So I'm with a company called I think it's Fifth Third. They're in the Northeast states. They serve a bunch of states, but they have what's called like a rate relock feature where you can pay them. It's like $250, and once a year they do a special for $99 once a month, where you can relock or just basically get the new rate. I'm not sure if it's on all mortgages or not, but again, look for banks like this if you have them, where they'll let you relock into the new rate that they have at whatever the current market rate is. And that those type of things are really good because say you get in today at 7, but a year later from now it's at 6. You can just pay them $250 and that's really good. We're like, if you're locked into a traditional mortgage, that's not so good because to get into that 6%, remember going down 1% makes a huge difference on a $400,000 home, $300,000 home, whatever your home is. But to get out of a normal mortgage, you got to do a whole nother mortgage thing and pay the closing costs. It's thousands and thousands of dollars and go through that whole shebang. It's expensive. It's not, we're like, if you pay $250, in some cases you could save $250 a month, or in 2 months, it literally will pay itself off, like, literally in like 1 or 2 months or 3 months or something like that. Like it's literally like it's a savings like that quickly. You know what I'm saying? So you have to do the math always on your investments or your return. But I mean, if you're paying them, and remember, once a year they have I'm not sponsored or anything on this or anything like that, but I've just been with this company for a long time. But it's a really cool thing, and other banks probably have things like this if you're in a different area or something like that. But it's a really cool feature because with rates so high at 7%, one would think they're not going to stay this high forever. They could go higher by all means. I mean, the Fed's going to raise interest rates here again. But the other thing is, you would think that the government doesn't want to keep them high because the government's paying interest on all their debt, $31 trillion of debt as well. So the government's paying more money on their debt, more interest on their debt. The government has debt on everything. Cities have debt, municipal bonds, states have debt. The federal government has $31 trillion of debt, to just debt everywhere, just owed to everybody, owed to Americans. They have US Treasury bonds, debt. It's just debt everywhere, right? So they have to pay interest out on debt all the time. Debt's owed to Americans, debt's owed to people all around the world. They issue US Treasury bonds. It's just boom, there's just debt everywhere. who even knows where all this debt is owed to? It doesn't really even matter who it's owed to. So they have to pay interest on it. So the higher the interest rate is, the more interest they have to pay out. So they don't want to keep interest rates high for long. They have to do it right now because we're dealing with an inflation crisis. But how long this will be, I mean, it could be a year, could be 2 years. Doubtful it'll be 5 years or 10 years. Very, in my opinion, very doubtful it'll be that long. You can let me know your thoughts in the comments. But we know how long this type of stuff typically lasts because you can just look at history. And now the government has more and more debt than ever. I mean, in 1990, we had $3 trillion of debt. Now we have $31 trillion of debt. And now the debt snowballs just piling on because it's just how much it costs to run the country. It's just kind of extrapolates. Remember, former President Donald Trump added $8 trillion of debt in 4 years. Biden's going to probably add that much or even more. It's just how much it costs to run the country nowadays. And with inflation, it's going to cost even more and more and more. And probably you put any president. Republicans are always kind of the ones that talk about this, but Trump actually added more than any president ever in 4 years. And if the next president's a Republican, it'll actually be interesting to see if he adds more than anybody ever. Because honestly, it's an exponential curve as inflation gets bigger and bigger. It's just that's why I like being not from either side. I'm just a realist. It's just how much it costs to run everything. I mean, you look at the defense of our country, which is the biggest expense of our country. We're spending almost $1 trillion a year just on defense. And every year they spend more. It doesn't matter if you're Republican, Democrat, independent, or fascist, socialist, or realist. They're spending more money on defense of our country every year. And this doesn't even include money for Ukraine, or that's additional. They're up to $800 billion a year just on defense of our country. We have to defend our country, especially now with people like Putin and China. And, I mean, literally in a few years, they're going to be spending $1 trillion a year on just defense of our country. Right there is $1 trillion. So let me know your thoughts in the comments, and I'll keep you up to date here on all this stuff going on here on a daily basis. So if you haven't yet, click the subscribe button down below. It's completely free to do so. Click the bell icon after you subscribe, and I'll keep you up to date here. Thanks for liking and sharing these videos as well. You can click here to watch my newest video next, and you can click here to see my newest update on IRS tax refund checks and details you need to know. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.